Dan, I'll just turn to you with a kind of a quick pile-on with the TikTok. Can I offer you a frustration of mine? Is that it feels like the debt ceiling, like we should be able to be thinking 8 steps forward through this already. And even when I read, Washington strategists, like nobody seems to have any answers. And I don't know if that's because it's just unknowable, but what do you think is really about to happen in the next couple of days here? Because the market continues to shrug it off.
Yeah, well, first, the Treasury Department is injecting a lot of liquidity into the system. We think we're going to get another $60–70 billion of liquidity, and that's going to continue to the debt ceiling. What that's doing is it's cushioning the markets for this very toxic political debate that we have. The reason why investors are conflicted on what's happening with the debt ceiling is that this is just a much more politically polarized environment, both on the far right and on the far left. So there's concerns that they could test that debt ceiling breach. I would argue that if we cross over June 1st, we still have a couple of days of cushion, probably till about June 7th. And so there's a little bit of cushion there. But we really needed a deal last night to be able to get that bill to the president by June 1st. So each day that clicks down that there's no deal, that pressure is going to continue to rise. And Kelly, as you know, interest costs have been exploding and tax revenues have been falling, and that's pulling forward the X date. And that's something that we're going to be watching very carefully today. But ultimately, this is the first step of austerity, and it's the hardest one because Congress isn't ready to do that yet.
It's like I don't want to get into that all over again, but if people don't go back and watch what you said, Dan, about 14% and rising debt servicing, like that is the much larger picture here. Of course, now we have to real quickly. What is the liquidity Treasury's been injecting? What do you mean by that?
Absolutely. So Treasury has what's called the Treasury General Account. This is the Treasury bank account. It's outside the banking system. When they push that money, that's how they're paying our bills right now. So when they make that expenditure, it's going right into the banking system. Janet Yellen's bazooka is bigger than Jay Powell's quantitative tightening. And that will all exist until the debt ceiling gets raised. But once the debt ceiling gets raised, that liquidity gets pulled. And that's why we think there's more risk to the equity market after the debt ceiling gets raised than before.
Rich, before we turn to some of the other kind of overhangs, I just want to ask about the debt ceiling and how it factors into, why are we even talking about it on some level? If you look at the stock market in the way that we're off to the races with, the biggest 8 mega, or just the fact that we're up in general. I mean, you are as observant as anybody about business cycles and where we appear to be in. Do you have any explanation for the trading behavior this year and what comes next, Rich?
So Kelly, I think that we are very much in a speculative environment. I think I've mentioned that to you before. When we have a narrow market where, if I'm not mistaken, year to date, about 50% of the S&P's performance is attributable to 3 or 4 stocks, that's not a very healthy environment. That's a very speculative environment. In fact, it looks like it's the narrowest leadership since the tech bubble, the peak of the tech bubble in 99 and 2000. So it's not like the whole stock market is taking part in this. And even today, you see NASDAQ up, you see the broader market doing basically nothing.
Right. So, Rich, I guess the question would be, in an environment, and social media was very fun this weekend because you can watch people one by one trying to figure out, do they throw in the towel and capitulate and just, give it a 4,500 price target on the S&P and buy everything, or do they stick with the bearishness that's been, kind of the prevailing sentiment? And I'm curious what your advice would be to investors who are feeling very frustrated about being on the sidelines if they still are.
Well, I think the opportunity set outside of those 5 or 10 or 20 names is extraordinary right now. I think if, one has to understand that if you're investing in those 5 or 10 or 20 names, your implied economic forecast is incredibly bearish. Like only 5 stocks are going to grow, 5 companies are going to grow in the entire global economy. I mean, that's ridiculous.